For months now, the financial world has been closely watching the Federal Reserve's efforts to shrink its balance sheet, a policy known as quantitative tightening, or QT. It's aimed at fighting inflation, but recent moves by the Fed signal a significant shift, prompting questions about a potential return to stimulus. Since mid 2022, the Fed was actively allowing bonds to mature without reinvesting the proceeds. Now this has changed. However, starting today, the Fed is going to start buying back bonds. I think it's at the end of this month. When it starts to do this, this is called quantitative easing, QE. And historically, the SPY in a 3-month window has returned 3%, and over a year period, it has returned 9%. So based on the historical context, I think this is good for the market, good for small cap, possibly good for healthcare stocks too, because they've been down a lot. Yields coming down help these sectors a lot. I do think there's a lot of risk. The Cape Shiller's at 40, 41 right now. We're seeing weakness in data center and in Oracle. When they reported earnings today, they fell out. So for me, like I've said in my group, I'm going to be playing swinging options with 3 to 6 month out contracts. This gives me the ability, if I get the trade wrong, I'm able to cut my losses quick, and I let my runners run. I don't do short dated options because if you pick the wrong trade, you got time and value against you, and if your strike is not going in your favor, it loses, it decays quickly. So for most, this is not a good strategy. I'll tell everyone that follows this channel, you're always staying the main trend, which for me is I like iBit, I like Ethereum. I also buy these on a weekly basis, and I'm always buying QQQ or SPY. That's just the passive investing side. Right now, I hold a few stocks like Netflix and things like that. I think these are good long-term holds. Right now, they kind of fallen out of favor. But anyways, I was just going to update y'all on what I'm looking at. I'll update some charts tonight or tomorrow. Thanks for watching.
And just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest-on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in reserves, in an ample reserves regime. So, you know, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, you know, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, you know, if you look ahead, you will see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves call it constant as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20–25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.